Welcome friends in this video. We will look at what XCN coin will do in the short term. Please watch to the end to understand. If you like and subscribe, I'm going to move on to the video. From a short-term perspective, there is a clear downtrend on the chart. Each time the price approached or touched this falling trend line, it exhibited a downward movement. This suggests that the trend line is working as a strong point of resistance, and the price is struggling to break through this level. In terms of market psychology, such falling trend lines indicate that traders remain sellers and face selling pressure every time the price rises. The persistence of this trend, especially in the short term, suggests that the bears are still strong in the market and that the price has failed to break out to the upside. This trend line is considered an important indicator in technical analysis, because every time the price comes to this trend line, traders react. So far, we observe that the price has retreated after each contact. This means that market participants see this level as a selling opportunity and sell their assets at this point. However, there is an important point to note here. Every downtrend sooner or later either breaks or changes. If the price approaches the falling trend line again and starts to get stuck there, then it is necessary to watch carefully whether the trend will be broken or not. Also, a breakout of this downtrend could accelerate the upward movement of the price. This is because trend breakouts often lead to strong price movements. Especially if a breakout occurs on volume, this means that the downtrend is over and the uptrend can begin. And of course, if it retests, it will be a healthier uptrend. But we cannot see the direction only with trends. We must also examine other metrics. Otherwise, we cannot predict the direction. There is a strong bullish order block on the lower side of the price, and this area has been an area where the price has reacted in the past and buyers have stepped in. Such bullish order blocks are usually the levels where a significant bullish move has started in the past. So when the price comes here, we can see that strong buying has already taken place at the same level. If the price falls to this area again, it's possible that there will be a reaction like in the past. However, the important point here is how the price came to this area and how it reacted at this level. If the price reaches this order block with a sharp and voluminous decline, we need to see if the buyers here can maintain their strength. Because sometimes if the selling pressure is too strong, the price may break this order block and go even lower. However, if the price is creeping towards this area gradually and without volume, then it is more likely that buyers will step in here strongly and push the price up. In addition, how the price reacts in this order block is also very important. For example, if the price leaves long pins after coming here, the candle closes to the upside, and a reversal signal is formed here, we can understand that buyers are strong in this area. This increases the chances of the price making an upward move. The less the price touches an order block, the more reaction it may receive. Looking at the price action, there is a prominent bearish order block at the top, and we can see that price has touched it twice in the past, and both times it has retreated with a downside reaction. This suggests that this is an area of strong resistance, and selling pressure is concentrated here. Usually, the first time the price touches a strong resistance zone, it experiences a pullback due to selling pressure there. A similar situation was seen in this bearish order block, which has been tested twice before. When the price hit this zone, big sellers stepped in and pressured the price downwards. However, each time the resistance zones are tested, they weaken slightly. So, when the price hits this zone for the third time, we will have to watch carefully how much seller's strength remains here. If the price receives a sharp selling reaction when it comes here like in the previous contacts, we can consider that this order block is still working as a strong resistance. However, if the bullish movement is voluminous and strong as the price moves towards this area, then we can say that the sellers may lose strength and the price is more likely to break this order block and move higher. If the price can break this downtrend in the short term, the price may go up to this bearish order block. When we look at the Elliott wave theory, there is a distinct wave structure in the market right now. First, the first wave seems to have completed with a strong upward bullish move. This is the first bullish move that signals the market's potential to start a new trend. The second wave that follows is a natural correction of this bullish move. Second waves are usually a pullback that partially retraces the gains of the first wave. We are now in the process of preparing for the third wave. The third wave is generally considered to be one of the strongest and longest waves, according to the Elliott wave theory. Because during this wave, buyers gain more power in the market and the price accelerates its upward momentum. With the onset of the third wave, momentum in the market is expected to increase, and the potential for the price to reach higher levels increases. At this stage, it is necessary to keep an eye on some critical levels to determine when the third wave will begin. In particular, if the price starts to show bullish signs by holding the lows of the second wave, this could be an important signal that the third wave is approaching. Also, to recognize the start of the third wave, it is necessary to pay attention to volume movements. If there is a significant increase in volume, this is usually a harbinger of a strong rise and may be an indicator confirming the start of the third wave. And also when the third wave comes, the rise attracts the attention of investors and they want to buy, so the price goes higher. The minimum target is the yellow line that I have drawn. I'm splitting the video very short, friends, because I came to you with an exchange where you can safely trade XICN coins. This exchange is the Onyx exchange. And now, Onyx has more than 1 million users, and you can trade without the need to KYC. When we come here in the search field and type XCN, it comes out directly and you can buy and sell from here. And if you want, you can also do leverage trading here. And all of this can be done without KYC. If you want to register at a discount, the link is in the description. Now let's continue with the video. Taking a closer look at the chart, we can see that the price action is moving within a distinct descending channel structure. Descending channel patterns usually show that the price moves within a specific structure within a downtrend and fluctuates within certain resistance and support levels. Such structures offer traders important clues about the direction of the trend and possible breakout levels. Currently, in this descending channel structure, the price has started an upward movement from the lower band of the channel and has reached the middle band. The middle band is usually a zone where the price can act as an important resistance or support point. The price has also broken the middle band and is moving towards the upper band of the channel. What matters at this stage is whether the price can break the upper band. If the price breaks the upper band and manages to break through it, the channel structure may be broken and the possibility of a transition to an uptrend may arise. However, if the price meets resistance at the upper band and gets a downside reaction, it may continue to move inside the channel, and the price may retrace back towards the mid-band or lower band. It is important to note that in descending channel patterns, price movements occur in waves. Usually, when the price reaches the upper band of the channel, it encounters a selling pressure and starts a downward movement again. However, in the current situation, the price has broken the middle band and is moving between the upper band and the middle band. This shows us that the price has a stronger momentum for now and is gaining upward momentum. A critical point will be whether the price can reach the upper band and what kind of reaction it will get from here. If the price breaks the upper band on strong volume and breaches the channel structure to the upside, this could be an important sign that the trend has changed and the price may enter a new uptrend. When the price breaks out of this channel structure, we may see a nice uptrend. And looking at the chart a little wider, we have an inverted shoulder head and shoulders pattern. This is a strong reversal pattern that usually indicates that the end of a downtrend is near and that the price has the potential to change direction. Looking at the price action right now, we can see that the Tobo pattern is nearing completion, and price is in the process of forming the last shoulder. To better understand this pattern, let's analyze the basic structure of Tobo. The inverted head and shoulders pattern consists of 3 main parts: left shoulder, head, and right shoulder. First, when the price is in a downtrend, it forms a bottom and receives an upward reaction. But the rise remains limited and the downtrend starts again. This first bottom is called the left shoulder. Then, the price makes a new deeper bottom, forming the head, followed by an upside reaction. Finally, the price falls again, making a more shallow bottom, which is usually located higher than the head level. This third bottom is called the right shoulder. At the moment, price action shows that this right shoulder is in the process of being completed. One of the most important parts of the pattern is the neckline. The neckline represents the resistance level between the left shoulder and the right shoulder where the price reacts. If the price breaks this neckline to the upside, the Tobo pattern will be confirmed and a bullish move will begin. In technical analysis, when the pattern is confirmed, the price usually moves up by the depth of the head zone. That is, the target level of the Tobo is determined by adding the distance between the bottom of the head and the neckline to the point where the neckline breaks. At the moment, the completion of the right shoulder seems to be a critical stage. If the price holds at the right shoulder level and moves upwards, then the completion of the pattern will accelerate and it will slowly move towards the target. If you want to see more videos like this, don't forget to leave likes and subscribe. Goodbye.